What could cause house prices to fall in the GTA? That's a question I'm going to be looking at in today's video. My name is John Pasalis, president at Realosophy Realty. You can catch all my latest writings at moosesmartly.com. If you like the video, please hit the thumbs up, like button, and subscribe to stay up to date on all my latest videos. So, of course, with house prices rising rapidly over the past year and a bit, a lot of concern is, will prices fall? What that might look like? When might they fall? And of course, I don't have any answers as to if, when, or by how much. But today's video is basically focused on thinking about if prices fall, what might trigger that, what triggers declines in house prices. And this just helps us be more mindful of what to look for and what types of red flags to look for when looking at the data and looking at trends in the housing market. So when we think about declining house prices, there are generally kind of two ways or triggers that might lead to a decline in prices. I mean, the first are fundamental factors, and fundamental factors would be a traditional recession. And when I say traditional, I mean, we've been in a recession in the past year, but the reality is there's so much stimulus and support from the government that this hasn't been a traditional recession. In a traditional recession, there are job losses. People can't afford their mortgage payments anymore. They have to sell their homes because they can't carry them any longer. Typical recessions are have a lot of negative economic impacts on households and families. And sometimes we see that impacted and the effects of that in declining home prices. This past year has not been that. I mean, house prices have boomed and people are actually wealthier today than they were a year ago, at least homeowners are. So this isn't a traditional recession. So are we going to see a fundamental shift in the market that might lead to lower house prices? I don't think that's going to happen anytime soon. There's still so much government stimulus and support trying to bring our market back to kind of where it was pre-pandemic, that I don't think we're going to see any fundamental impacts on the market, job loss or anything like that are going to drive home prices, at least not for the next year to 2 years. I can't imagine anything dramatic happening that would lead to that type of a shift in the market. And again, I don't want to say it's impossible, obviously, but I feel like there's just too much stimulus in the market, and federal and the Bank of Canada are just doing too much to kind of keep the economy going for that to be a likely outcome, at least in the short term. Now, when we think about the other ways house prices might fall, the other, of course, is just behavioral factors. And when we think about behavioral factors, this is really just change in consumer sentiment, buying patterns, and preferences that leads to a shift in the market. So when we actually think about the boom in house prices over the past year, this is actually a behavioral shift. The Bank of Canada, a lot of economists call this fundamental because it's largely end users and not investors, but it's not fundamental. I mean, fundamental factors don't push prices up 30 to 40% in a single year. This is just a behavioral shift. A lot of buyers decided to accelerate their buying plans, jump into the market a little bit earlier than they planned, move out of the city, out to the suburbs. And these shifts are what pushed house prices in the suburbs and these smaller towns up 30 to 40% per year. Now, on the flip side, well, what does a behavioral shift look like when prices are falling? I mean, we kind of saw a little bit of that in 2017 during Toronto's last housing bubble when prices were rising rapidly. What happened was the province hinted that they might introduce a foreign buyers tax. And when the BC government introduced a foreign buyers tax, it cooled their market. So just the idea that the Ontario might do the same thing really just spooked buyers and sellers. And what ended up happening is, buyers hit pause and pulled out of the market out of the fear that home prices might fall. Sellers, out of the fear that prices might fall, rushed into the market. And we had this huge imbalance between supply and demand in a very short period of time that pushed home prices down. So the reason that wasn't a fundamental factor is because there weren't enough foreign buyers to sort of explain why house prices fell relatively rapidly in the GTA in 2017. They fell about 20% literally in like 4 months. And it's not fundamental because there weren't that many foreign buyers that could explain that. That was sort of a behavioral shift that kind of just pushed prices down mainly because people got worried about decline. So what that might look like in sort of today's context, again, if buyers are just too fatigued and can't afford house prices and hit pause, and we see sort of a decline in the demand for housing, as listings increase, I mean, house prices may end up falling in the future simply because, again, inventory of new listings exceeds the demand. I don't know if that's going to happen or when, but these are the trends that we want to sort of keep an eye on, especially over the next 6 to 12 months, because if we start seeing more buyer fatigue, buyers pulling in the market, and listings accelerating, these are sort of gradual trends that might lead to a softening in the market. We're seeing a few signs of that even as we head into the summer market right now, in July, leading into July. But these are, I mean, right now they tend to be more seasonal, but we are seeing in some markets where there's just not enough active demand to kind of create, get the types of prices that buyers or sellers would have gotten even a month or two ago. So a key thing that we're going to be looking for is what the market looks like as we move into the fall market, September 2021. Are buyers going to be rushing back into the market the way they normally are? Because if they don't, again, if we think about why they might not, when we think about COVID pulled a lot of demand forward, which means a lot of the people who were planning on buying in 2021 rushed and bought in 2020 for a number of different factors, which is what led to a lot of these homes having 30 and 40 and 50 offers on them. So if the demand, just the pool of home buyers just happens to be lower over the next year or so, that might contribute either to flat home prices, or if it's really low and listings are high, potentially a decline in prices if things are really out of balance. So these are the trends we're going to have to keep an eye on from month to month, how they evolve. But that's an example of how these unpredictable behavioral trends could lead to declines in house prices tomorrow, just simply because there's more active listings than there are demand from buyers in the housing market. Impossible trends to predict because we're trying to sort of obviously predict people's buying patterns, which we can't. So these are just trends we're going to have to look at on the ground to see how they're evolving over time, to see if there's risk of that happening in the near future. I hope you found that helpful. If you have any questions, please post them in the comments below or send me an email at askjohn@movesmartly.com.